Hello, my name is Benjamin Z. Miller. I'm the Managing Director of Alamo Mortgage Holdings. And in this presentation, I'm going to talk about how you can supplement your retirement by purchasing our corporate income bonds that are secured by real estate. I'm going to go through everything in some detail, but first I want you to consider the situation of maybe you are at the point where you would like to supplement your retirement with an additional 5,000 pounds in monthly income, and you would like to do that for a long period of time, say 50 years. We have such a financial product that meets that requirement, our long-term bond, and that bond would allow you to earn that sort of passive income. However, you'd need to purchase 750,000 pounds worth of bonds to get to that level of passive income. If you're not in a position where right now you can do that in one shot, you can get on our annual investment program where over a few years you can make a purchase of maybe 50,000 pounds in bonds, 100,000 pounds in bond, and build to the level of income that you want. Now, bonds may not pay as much as gambling on cryptocurrency or day trading, but there's a lot of people that have had some bad experiences with that, where they have lost money. And the nice thing about our bonds is they're secured by hard assets. We secure the assets by mortgage debt in the United States. I'm going to go through everything in more detail, but that's the basics of what the opportunity is for you. So let's first do a disclaimer. As accredited investors, you're going to be aware that all investments carry some level of risk. This investment's only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. So let's talk about the situation. Sometimes people ask, well, why are you buying mortgages in the United States? Why not buy them in the United Kingdom? Well, good question. Let's look at the long-term history of the British pound and the US dollar. And we will see that the British pound back in 1945, towards the end of Bretton Woods Agreement at the end of World War II, towards the start of the Bretton Woods Agreement at the end of World War II, one British pound would buy approximately 4 American dollars. And over the decades, the pound has lost value to the point where they're almost at parity now. On the 1st of January 2023, one British pound only bought $1.21 instead of $4. So the British pound lost a lot of power in terms of buying power. And you certainly, if you travel around, you may have noticed that. So at any rate, why would it matter? Well, it matters because if you can earn 8% in the United Kingdom versus 8% in the United States, you could earn, theoretically, if this trend continues, it might be better to have it denominated in US dollars. Now, if your portfolio is mostly in pounds and you want to stay in pounds, that's absolutely not a problem. We can sell you the bond denominated in pounds. But if you would like to diversify your currency, we can also help you with that. If you would prefer to be paid in dollars, we can do that. We don't make any money on the exchange rate. We do it at the listed exchange rate, and we don't make anything on it. We do it as a convenience for our bondholders, but you've got choices with us, and that's something that's real relevant. Now we're in the business of mortgage note investing, and from time to time I meet investors that think, hey, that's a good idea. I should buy US mortgage debt. I'll get paid in dollars. Great idea. I'll do it. Well, it is a good idea. But before you do it, you should learn the business unless you want to have an unpleasant situation. There's 6 factors that drive the value of a mortgage note. Fortunately, with Alamo, we take care of all of this, and you don't have to waste any of your time trying to learn this business if you already have a good business. Maybe you're a dentist or maybe you're a corporate executive. It definitely takes some time to learn the note business, but there's 6 factors that drive the value. The buyer of the mortgage, the buyer of the property, that's one factor. Maybe they're a government employee versus an entrepreneur that may have unstable income. The government employee is always a more desirable buyer. The collateral, doesn't matter what the note is for. What matters first and foremost is the value of the collateral. So if you have a note for 500,000, that doesn't mean that that's worth 500,000. That just means someone signed a note for 500,000. But if there's an appraisal on that property and it's only worth 250,000, it would not be a good idea to buy that note for a discount where you could buy it at 400,000. That would be a dangerous idea. the buyer's equity. Did the buyer put down a large down payment or a small down payment? We like to see buyers that put down large down payments. That makes it safer for our bondholders. What about the terms? All other factors equal, it's better to have a high interest rate than a low interest rate if you're buying mortgage notes. The history of the payments. Is it a brand new note and we don't know if the borrower will pay, or is it a mortgage note where they've got a long history of paying on time? And then the last thing is the actual paperwork. Every state in the United States has slightly different rules, but we focus on just Texas. So we're buying mortgage notes just in Texas. And that's a good situation for you because we're very focused and have a competitive advantage in Texas. We want to look at the paperwork. Was it closed properly with a title company and an attorney? Or was it just two guys that put it together in agreement and they got on one of the websites and found some documents to make a form? Here's an example of a note purchase to make it more concrete. This is not one we have in our portfolio. I just show it as an example. Imagine this property. It's a real property. It's located in Texas. Imagine it sold for $120,000. And the circumstances of that sale are the buyer was someone that wanted the house, but he did not have good credit and he could not get a loan from the bank. So he asked the seller if the seller could finance him. The seller agreed to finance him at a high interest rate at 10%. They agreed. And the buyer is now making monthly payments to the seller for $877.57 per month because the interest rate's 10% and it's amortized for 30 years. Now, I want you to imagine that for 5 years, this buyer has been making payments on time like clockwork, very reliable borrower to the seller. And the seller wakes up one day and wants cash, needs cash. So the first thing he does is he calls up the buyer and says, hey, you've been there for 5 years. Can you please go get a mortgage? And the buyer says, no, I can't get a mortgage. The bank still won't give me a loan. They say I have bad credit and they say that I'm self-employed and they won't give me a loan. So then the seller next gets on the internet and types in sell a mortgage note for cash. And then he finds companies like Alamo and he starts calling them saying, hey, can you pay me $96,574.32 for this note? That's what's owed on it. It'll be great. You can earn 10%. And then the mortgage buyers, they all come back and say, oh, we're not going to pay that. We have to pay less than that. And they argue back and forth and they finally agree on a price. Let's imagine the price is $83,322, which represents a 12% yield. Some mortgage buyers might go with that sort of yield. We typically try to get a higher yield than that, but it's within the range of normal. That's how that works. The next thing that from time to time people ask me about is why bonds? They say, well, you know, there's a lot of inflation. Why would I want to buy bonds? Well, folks, there's always a lot of inflation. The entire history of civilization is a lot of inflation. But it's important to have in your portfolio some diversification. And rather than giving my opinion, I'm going to talk about a Nobel Prize winning economist, Harry Markowitz. He won the 1990 Nobel Prize for his work and contributions to modern portfolio theory. And basically, that's a theory that a lot of these big firms like Merrill Lynch, BlackRock, Goldman Sachs, they just love this modern portfolio theory and they like to use it in their models. Has a lot of math. It's a very complicated theory. But at any rate, when Harry Markowitz worked with his own personal portfolio, he didn't use any of that. He just would put half of his portfolio in stocks and half of his portfolio in bonds. And once a year, he would adjust it. So if the stocks went up, he would sell stocks and then he'd buy more bonds. Or if the stocks went down, he would buy bonds and he would sell bonds and then he would buy more stocks and he would try to maintain that 50% ratio. So that's basically how that works. And it's important, most experts would say, to have some bonds in your portfolio. You might think about your own portfolio. And I find a lot of people that they've really gotten a lot of these other assets in there that they're just gambling will make them a bunch of money. But at the end of the day, there's no telling what will happen. And it might make sense if you feel like you need it to get some more bonds. But rather than just buying bonds, why not get some high yielding corporate income bonds that are secured by real assets, real estate? Alamo Mortgage Holdings, we can help you with that. Why do we do Texas? We do Texas because it's good to focus, and we focus on the state of Texas. We've got a team that has a lot of experience in the state of Texas working for you. We're able to find good, solid notes for you. It's a great opportunity. What are the advantages of the note? Well, you can get your passive income goals more quickly. We offer diversification. You're not just buying one mortgage note, you're buying a package of mortgage notes, and you don't have to collect the payments. You don't have to do anything. We take care of all that for you. Also, we do not charge our investors any fees. I meet so many investors and they tell me about their low-cost index fund, and they're so proud of the fact that they have a low-cost index fund. And it's great that they have a low-cost index fund, but no fees are better than low fees, in my opinion. And this is something that you might want to consider if you like low fees. Maybe no fees would be even better. So that's something that's relevant. We've got a great team. I'm not going to go through everyone right here, but you can look at the website, alamomortgageholdings.co.uk, and you can see all of the team that we've got working for you. We've got a team that has experience in the business, and we definitely can help you with being able to build up your passive income. So why should you buy our notes? Well, if you want an above average passive income, Alamo Mortgage Holdings can help you. How long is the term? We offer 3-year note, 5-year note, a 50-year bond, whatever you're looking for, we can help you with. Can you put the notes into your SIP, your self-invested personal pension? I see no reason that you can't, but it would ultimately be up to your SIP provider. What type of a note is it? It's a corporate income bond. Is it a regulated product? No, we're not a regulated product. That's part of the reason that we can pay so much more. We haven't gone through that additional expensive regulation. So that lets us offer a higher return to our investors because we don't have to recapture that expense spent on regulation. At some point we may do it, but right now our bondholders, they prefer to get the higher returns. Who can invest? Accredited investor, sophisticated investor, institutional investor, come one, come all to Alamo Mortgage Holdings. How's the tax managed? It's very simple. We pay all the money to you. We don't deduct anything for taxes. We just pay it all to you. Can you get access to the money early? No, folks, this is not like day trading where you can read some news and then get access to it early. We plan so that the bonds are liquid at the time that they're supposed to mature. How can I invest? It's very simple. Just email me, ben.miller@alamomortgageholdings.co.uk, or go to our website, www.alamomortgageholdings.co.uk, fill out the contact form. I hope that helps, and I wish you good luck with your investing.